Tesla's record quarterly loss and massive spending are raising concerns about the company's future. The electric car maker revealed it spent $745 million in the first 3 months of the year and posted a record loss of nearly $710 million. CEO Elon Musk defended the company in what turned into a heated call with Wall Street analysts. Tesla shares took a nosedive in after-hours trading. With more on what this means for the company, I'm joined now by CBS News contributor Nick Thompson. He is, of course, also the editor-in-chief of Wired magazine. Good to see you.
Good to see you, Vlad.
So you were just talking to me before about this earnings call and how wild and crazy it was. Describe it for us.
Well, what's so interesting about it, right? There's this huge fight. Right? Wall Street is shorting Tesla like crazy. Silicon Valley has complete confidence in Musk. There's sort of this big difference. So the earnings, huge expectations. They come out, and they're actually pretty good, right? The losses are bad,
right,
but not as bad as everybody thought, right?
So which is usually a good sign for Wall Street analysts. They say, oh, you actually beat our expectations.
Beat our expectations.
That's good.
Right. And so the stock was doing pretty well, right? Like right afterwards, and Musk tweeted out a thing saying, la, 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 on a TechCrunch story saying earnings are good. Then the analysts, Goldman Sachs analysts are asking their questions about gross margins and what they're asking about. And Musk declares, I'm bored. These questions are boneheaded, and cuts them off, says no more analysts, and switches to an analyst from YouTube, a guy who runs a show called Hyperchange or a guy who's a contributor on a show called Hyperchange on YouTube, who'd gotten in touch with Musk on Twitter. And then they go into like totally different directions. So they're no longer talking about gross margins and complicated financial questions. They're talking sort of meta questions about Tesla. And right then, the stock just goes boom.
Wow.
And so several $1 billion are knocked off Tesla's market cap. Also, Musk goes on a little bit of a rant about the media, which is never a good sign on an earnings call. So,
wow. So that's really fascinating because it's just kind of interesting to me. We were just talking about this earlier before we started our chat, that sometimes around a CEO, a brilliant CEO, there's this sort of cult of personality that builds up around them. And then when they act the way they're supposed to act, which is they're mercurial, then people say, uh-oh, what's going on here? And the stock takes a nosedive.
Well, this is what's interesting about Tesla. So much of the value of Tesla is built on Musk, right? And there's a sense that Musk can always pull a rabbit out of his hat. And if you looked at the financials, if the same financials that Tesla had, another company had them, people would be even more concerned. But Tesla's been in this situation before, and it always does turn the corner. And Musk always does find money, and Musk always does come up with something brilliant. But if people start to worry about Musk and say, wait a second, this guy can't handle Wall Street analysts for an earnings call?
So is what you're saying essentially that investors and perhaps even analysts are losing confidence in him, and if they lose confidence in him, if the company, at least a part of the allure of the company, is tied up in his personality, the cult of personality, that's a bad sign.
That's a bad sign. Now, I will caveat that by saying no one has any idea why the stock market ever does anything for any reason whatsoever. But the most likely explanation is that people really care about Elon Musk. They really depend on Elon Musk, and they really associate his brilliance with Tesla's success. So when he starts acting in ways that don't seem like the way as a CEO should act, like cutting off the financial analysts, then the stock takes a hit.
So will it recover?
Well, that's the thing. Like, there's nothing fundamental that changed about Tesla's business. This is actually a point that the YouTube analyst, who had a really good 20-minute YouTube segment about the earnings call, makes at the end. He's like, I don't see why the stock should drop $2 billion just because he cuts off some analysts.
Yeah.
So
actually, so that's true. Then if the fundamentals are strong, then if you still like the company, even with some of the issues plaguing them, this would be a buying opportunity.
Yeah, so the big question for Tesla, and this is the thing that we have not answered, how many of the Model 3s will they be able to make? They've been stuck in production hell. He did this amazing interview with Gayle King about 2 weeks ago where he said it's because we over-robotized. We have too many robots in the factories, they're changing it. The question is, can they get to 5,000 Model 3s a week? They're now at about 2,000. They have a waiting list of 400,000 people who have put deposits on these cars. You make 2,000 a week, that's 200 weeks to get these people their cars. You have to go faster. So they're saying we're going to go faster. We're ramping up production. We're going to run 24/7. The question is, can they get there? Because building a car is really hard, right? You need to get all the parts at the same time. You need to get 5,000 batteries. You need to get 5,000 steering wheels to make 5,000 cars in a week. It's super hard to do. The question is, can Tesla do that? So we'll see over the next couple of months whether they can get to 2,000, 3,000, 4,000, 5,000 cars a week. If they can, they're going to be fine, right? It will become profitable. It will be all right. Musk says it's going to happen. If it doesn't happen, that's when you have a big problem. So in a certain way, this earnings, the letter, the conference call kind of just kicked the can down the road. It wasn't dispositive in either direction. So it will be a very, very interesting company to watch.